And happy Friday to all the subscribers, the Independent Investor channel. I was a couple seconds late tonight. I'm not ever late. I look forward to this project every Friday. I'd love to welcome everybody to the open forum here that we provide on the Independent Investor channel. This is a unique forum. I do this project for you. This project, it belongs to you. Tonight is probably one of the most important offerings that I've offered. Over the last couple of years, I've got relatively specialized in my approach with covering a few select companies. I get solicited every single day for companies, things that you do not understand below the surface. What I provide on the Independent Investor channel is the pointy end of the spear. You can appreciate that it's the top of the iceberg. But you are not privy to what is below the surface with regard to the solicitations through the channel, and my responsibility that I uphold as intimately as I can, being a forward-facing social media entity and an investor mind that brings a more rational, sound, deliberate decision-making process through my application, and I look to pay that application forward with you. Tonight, I found it prudent to devote this live stream to Aduro Clean Technologies. So I will tell you right up front, this is going to be a discussion that is going to be focused, hyper-focused on Aduro Clean Technology, who as of late has probably placed about an average of a new news release every three or 4 days. And the news releases are not, they're not wags. They are real, and they are big. There has been some attempt at providing some transparency in a very deaf market, a market that is not conducive to this type of activity currently. We are currently in an environment where a lot of schools of thought, I'm partially one of them, is of the belief that we have not fully escaped from the bear market, as opposed to being partially still consumed by the bear market, as well as having some overhang from what has been a fairly lasting bear market for the last couple of years, and rightly so. I'm not going to give you the all go. That's not going to happen from me. Through my evolution as a stock investor, it always keeps you on your toes. Stock investing, as I've said many, many times, humbles even the best investors out there. And for you to get in early on a ground floor opportunity can try your patience. It can last for years. It is difficult. It's not easy. It's not as easy as just flipping on YouTube and finding the most controversial YouTube creator and just putting all your stock into that specific message. It does not work that way. I'm here to break your bubble. It does not work. There is no guarantees in stock market whatsoever. However, I will suggest this. The game can be lucrative, and it can be very, very powerful. And anymore with the power of information, as information is made possible to you, not made possible through grander social media, as early as about 10 to 15 years ago. It has just been made possible here to where we can collectively scour over a market that has tens of thousands of equities in it, and look to put our focus on where that focus deserves to be. And that is on companies like this that are looking to change the world, and they are looking to do it in a big way. All right. I'd like to give a special shout out. Yazan's been a guest on the channel. He will continue to be a guest on the channel. Our attempt here is to bring people together around a message that, quite frankly, myself and Yazan have spoken many, many times. This company is easy to invest in. There are other companies out there that can make you money. There's no doubt about it. Value, S&P investing, those types of things can make you money. All right. But we have talked about this initiative. We have combed this over back and forth. We have revolved around this message. And we share the same sentiment with this story. There has been so much work put into this project before even coming to public markets. And we're going to highlight the Arrowhead report that was released just this week that would suggest a price target on the high end of $5 a share. We're going to talk about some of the other content creators out there that are trying to generate a little bit of awareness on this topic, guys. In all fairness, Aduro is busy being Aduro, all right? And it is very difficult in these markets that are not conducive to these stories to make sure that the entire story is being told. And Arrowhead did a fantastic due diligence report. It's 47 pages long. I task you with taking the time to read that report. It's just that simple. It could be one of those items that are life-changing for you, and that is what we're looking to do, is making sure that we're spending our minutes in a productive way and making sure that we're finding that elite top 1% out of a multitude of stocks out there that are doing one thing or another. But there are very few opportunities like this. It is very important for you to do your own due diligence. This is a non-paid promotional piece of content. This is something that I am opting to do for my share owners of Aduro, my would-be patrons of the Aduro message, and the grander subscriber base of the Independent Investor channel. Good evening to you, Yazan. Thanks for popping in and saying hi. I really appreciate it. But it has been a jam-packed news release, and I want everybody to kind of curb their enthusiasm a little bit. If you've heard the old saying that there is no emotion in stock investing, it's probably one of the best pieces of adherence that you could incorporate into your application. And I find that it is the one that it's the rule that's broken the most. Everybody feels good when a stock is going up, and everybody feels bad when a stock is going down. See the irony in that? All right. I am going to give you my unique perspective um, in a way that only I can deliver to you. Okay. You're going to come to a consensus about the discussion's topic tonight about whether or not you want to invest or not invest. Okay. It is your prerogative and your decision alone to make those decisions to buy or not to buy. If you decide not to buy, it doesn't mean that it means that the stock is not going to go up or down. If you do decide to buy the stock, it also, in all fairness, does not guarantee that the stock goes up, and it does not guarantee that the stock goes down. Okay. However, it does put the realm of capability for a company like Aduro in a box. Okay. And when you step into a desert landscape and you look out over an OTC market, you see 10,000 stocks. When I look at opportunities like this, I take the opportunity to provide a bit of appreciation back to the people who provided this message to me. And I, in turn, am providing that to you. And I think it only appropriate to thank the person who brought this message to me. Now, I own my shares. I'm calm, cool, and collected. I'm going to disclose the actual buys. I made 6 buys in 2022. The first couple of buys I made all in November when the Game Changer program was first announced, and I was frantic then. I'm fine now. I've been fine for a long time. A move in a stock does not necessarily affect my mood at all, one way or the other. I'm very ultra long on this company. But I want to take this opportunity to thank first and foremost Mariusz Skanoczki. He's one of my featured channels. If you don't know how to say his last name, he would admit that it's one of those that's difficult to pronounce. All right. But Mariusz is a very, very underrated YouTube channel, as well as the Aduro name is a very underrated name, as you'll soon find out when we jump in to the Arrowhead report of due diligence. All right. But he's got the most content online. He's doing a wonderful job of covering the story. And now Penny Queen has been a guest on the channel. She's also a fabulous stock investor mind. And like Mariusz, actually puts a lot of focus on this niche segment of the market, which for you guys that know me, know that this is an aspect and an element of my game. Okay. But it helps to hear different opinions. Look, if you hear something from Penny or Mariusz that is differing from myself, so be it. The idea here is to further your education, further your understanding, and perhaps maybe you gravitate with the way that I explain the information, gravitate with this idea, or just quite simply take it as an introduction to a life-changing opportunity. And I believe it to be just that. Carbonomics actually has been added to my featured list of featured channels, along with another Aduro content creator this evening who's actually in the group, Passive Income Investor. Just released some fabulous content last week, I believe, on Aduro. It was fantastic. He does a great job. Kyle's domiciled in Canada. If you're not subscribed to his channel, you're really missing out. I really think this guy probably deserves 50 to 100,000 subscribers with the energy that he brings to the table. And he's very entertaining to watch, and he makes stock investing interesting. Okay, it doesn't have to be boring. For me, look, I expect to make money, and for a lot of people, that's their sole motivation. Great. I don't invest not to make money, but this guy has a way to make it not only fun but also edgy. And I really like that about Kyle, and that's probably why he meets my very short list for criteria of support as a featured channel on the Independent Investor channel. I really appreciate your efforts, Kyle. But you can kick over and you can catch his delivery as well on Aduro. Outside a few other content creators out there that are pushing out the Aduro story, I think that it is up against a wall of very difficult markets that, again, I don't believe are conducive to these stories. Now, just about 5 weeks ago, 6 or so weeks ago, Aduro made a nice push to the north in the stock price, only to see it retrace. Um, this momentum feels different. The chart patterns are aligned significantly better than the last pattern, that's for sure. This pattern really looks like Aduro may really work for a long overdue breakout, which I think it's long overdue, and a long time coming. Especially where I feel like the Shell Game Changer program fell on deaf ears and was not given its due attention. Now, Aduro is not alone in this fight with regard to having difficulty telling its story in a marketplace that is a proven market. We are not in ladder 2000 to 2020. That decade, especially the latter part of the decade, especially with the emergence of the SPAC craze for about 6 months, where anything that anybody touched north of $10 was going to go on a very predictable run and make people money. Hell, I made money doing it too. Okay. That timing is over. And dare I suggest the fundamentals do matter, because Mariusz has talked about this topic many times, and he's discussed how the market has changed and how even we are in a time right now where the markets are skeptical. I couldn't agree more. What I mean by that is if you want to look at fundamentals now and just solely invest on fundamentals, you probably stand just about as good of a chance as taking your chances on a company like an Nvidia or an IPO arm. Okay, what the reason I suggest that is your value investing has held fairly well in over the last 2 years, with people looking at the safe haven. The volatility in the bond market is something not to be ignored. Bonds just passed over the volatility mark and actually became more volatile than gold just as of late for the first time ever. That really just speaks to the time with the increase in the interest rate and the attractiveness of bonds that started 12 months ago. And now here we are in a market that sees a real estate market that cannot continue to sustain the hunger that is provided not only by sellers and by buyers to engage in a real estate market that they would otherwise engage in, but just cannot do that with the higher inflation rates. How does it affect the OTC markets? OTC markets, if you it is perceived that you have liquidity issues and lack of access to capital, it's going to put a damper on that. And it has. For anybody that has paid attention, it almost seems like good news goes to deaf ears, and we are piecemealing stories to look at those stories out there that create any hint of bad news, and companies are punished for it, and they're punished bad. Now, if you go back 6 to 12 months on the chart of Aduro Clean Technologies, you will find a company that is held in the pocket just about as nicely as any company that I've seen. It has basically weathered a storm. In markets that have not been conducive to weathering storms, Aduro has done just that. If they are to be commended on achieving what they have set out to achieve on the company side, they need to equally be applauded on their achievements for sustaining that value for share owners. Now, I will quickly suggest this: for whatever production has happened, whatever demand over the Aduro shares, whatever it might be, the tight share float that we're going to talk about a little bit when we get into the report, has really lent itself in a way that would suggest that this company has been around a lot more than just early 2021. Okay. It has been around for 10 years plus, and about $50 million of investment has been put into the technology to bring it where it is that we are discussing now. This is cutting edge. Okay. You want to quit the live stream, go watch Netflix. I caught Painkiller this week. I highly recommend it. Yada, yada, yada. Matthew Broderick did a fantastic job talking about how no matter what, the system is always right. Okay. And the system will be defended at all costs, no matter how guilty they are. All right. This right here, this affects everybody. Okay. And it affects everybody from the perspective that if you don't buy Aduro shares, which is not for the faint of heart, okay, it may not be for everyone. That's for each individual investor to determine. Okay. What I would suggest is this: read the 47 pages. Okay. You're going to get no sympathy from me. Read the report. If you're interested in stock, you frequent the independent investor channel, and you hear the terms due diligence thrown out there all the time. You hear these things about exciting companies, which Aduro is one. Do a little research on it. Educate yourself up on the lack of recycling capability of the major companies out there, and the absolute critical need right now to frantically find these solutions to meet looming 2025 mandates on the horizon. They are coming, and rightfully so. We are behind the times. The microparticles that are ending up in our food chain, guys, it's happened over the course of many, many years. Make no mistake about it. We are late to the game. This is a global crisis, okay? And I hope, for the love of the planet and the love of the fact that when I am gone someday, that my two children can involve a potentially cleaner environment because of the technologies that both Aduro and others in the space are looking to bear to tackle this plastic problem. What is the plastic problem? Over 80% of the plastic now that is produced is unrecyclable through methods that are available now in 2023. You think, how is that possible, Ryan? That just can't be. I've got my plastic bin in my house, and we throw our plastic water bottles into the green bin, and we think that when that green bin is emptied out at the roadside, that is somehow guaranteed to go and get recycled. My friends, you need to wake up and smell the coffee. Okay. You need to realize that the best application that you can have in life and how you approach right, wrong, or indifferent is independent. Okay. Don't succumb to the whims of understanding what it is that you think or everybody else thinks you should understand about a topic, especially this one. Think about how many use cases there are in plastic for a moment. Think about how ingrained plastic is in our lives. You want to talk about a global crisis? Try pulling plastic out of the global recycling chain or the circular economy and see what kind of chaos we can create in society by removing plastic. Plastic is ingrained in our everyday lives. And unless we can figure out a way to break the chain, and that current chain is produce, introduce, consume, and then discard. And it is upon the discarding of those plastic products that 80% of them end up at the landfill. All right. You've got your polypropylene, your polystyrene, your polyethylenes. Those are the hard to recycle plastic. Aduro can deal with all three. Okay. Very important to start to study some of the other mechanisms out there that are using high input and high heat methods, which can actually offset any type of product profit or revenue that could be generated on the back end of producing the plastic, because the input to get that resin or that pellet or whatever it is on the back end through the production cycle actually is so high cost that it does not become economically feasible to actually subject plastic to the rigor of recycling now, i.e., the reason why most of it ends up in our landfills. All right. So to educate yourself up on the topic, very, very important. And I just wanted to give you guys kind of a segue. I too am providing a lot of content on Aduro. It's a fabulous company to cover. I find it very, very important for me to continue and basically be an arm of expectation from the government or from the upper management that is actually working diligently on this company, and really try to augment and highlight the progress that has been made thus far. So with that, guys, I really appreciate it. When we come back from the break, we're going to actually jump in here. We're going to actually look at this Arrowhead projection because I really want to highlight a few things. We've got a robust group in here tonight. Please leave your comments, questions, dialogue, anything that you want me to take to the Aduro team. I can certainly do that. I have been to the facility. I have interviewed the CEO, and I have talked to a lot of people who are closely involved with this story. If you value your time and are interested at all in potential opportunities like this, stick around, guys. Give yourself that opportunity to actually enjoy the content tonight. Have yourself a cocktail, sit back, relax, enjoy the show. We'll be back with you in just a moment. Fantastic. I appreciate you guys. And you guys are kind of seeing, I'm going to click over here so you get the full screen. This is the Arrowhead product that was released actually, and it is a really, really telling read. You guys can kind of jump into Yahoo and you can see what is going on with the news releases. You can actually see all of this news, but Arrowhead did a really, really good job of summarizing all of the specifics. But I want to scroll all the way up before I get into some of the things that were really stuck out to me. I've read this a couple of times. I will read it a couple of more times because you will pick up things that you did not find on the onset, and very, very important to understand. And this report is only 1 day old, so this is hot off the press. Like I said and promised to you guys, this is as cutting edge of information as you can possibly get. All right. Now, I want you guys to focus in here. We're talking about a market cap company that is extremely, extremely under the radar at 67.5 million CAD, around 50 million US. Ticker symbols here, very simple to find that information. But I want to bring your attention here to the fair share value bracket that Arrowhead has put forward for the would-be patrons and consumers of this report. The current share price here at $1.05 CAD what did improve today on a pretty nice jump of about 7 or 8%. But the last month has seen the shares increase by about 25%. So a modest increase and a jump for the bulk and magnitude of the news releases that have come out on the company. But this is an incredible forecast. Now, I actually read this with a little different lens, and I understand I'm supposed to be really, really excited about this. I am. However, I have much grander forecasts for Aduro. And I don't really think with the news that's been released, this is really that aggressive. I actually think this is fairly conservative. Now, that's my perspective. You are entitled to your perspective. I understand that it's about a 4 to 5x from current levels. That's nothing. And we are going to talk about expectations with this company. But I don't want you to look at this as, all right, this is an opportunity to pick up undervalued shares, which they are, and look to 5x your money and exit. Because I think that the majority of the profits that are going to be made on this company are going to be made long term. Now, that is barring a few catalysts that I think have to remain intact for Aduro going forward. The first and foremost is that they do not get taken over and bought out. I certainly think that what we have known of the company for a long, long time is that I don't think an offer of 1.5 to $2 billion right now would be anything outside of the realm of possibility. I absolutely do not. I hope that doesn't happen. I think with the Aduro verticals that they have, I think they could really scale this business, and they could scale it twofold, which is noted here in the key highlights. Aduro's business model is likely to be based on licensing of its hydrochemical technology. Further, the company plans to build and operate its own plant as part of an own and operate model under appropriate circumstances. I believe that they're going to do both. I'm more bullish on the first of the two potential revenue streams for their plastic recycling technology. However, I do believe that the sky's the limit for Aduro. And I think whatever they choose to do with their strong network of patrons, both here in Canada, here in the United States, as well as abroad, especially with their involvement with Brightlands Capital and Camelot, I think their involvement with them is going to help really leverage their opportunity, both here in North America as well as abroad in Europe. So what you're going to find here as you review through this report is that their reach is very impressive for such a young company. Now, the key risks are identified a couple of places in here. They are straightforward, and they are somewhat common amongst startups like this that don't have sustainable revenue at this point, maybe subject to technological advances beyond what Aduro is currently boasting, as well as fluctuations in commodity prices that could cause the commercial production to be unfeasible, may render refining uneconomical. This is actually laid down out in bullet form further on down in the report. I recommend you read that. Just where the key risks are involved, you need to understand if you're going to be excited about the premiums that are involved with the company. You also have to understand the risks that may be involved with the company as well. But I want to cruise down here. I'm going to skip most of this, and like Mariusz said on his video, I appreciated him talking about how important it is for you to read that. It's your job. It's our job to actually bring this information to bear. If you do not follow me on Twitter, you can follow me on Twitter. If you do not follow Aduro Clean Technologies, well, then that's a start. Guys, it costs you nothing. And for this information to be as readily available for no cost to you, you guys should be jumping all over this. I mean, this is incredible information. This is fantastic. This is a summary. This is not Arrowhead's opinion. This is a summary of real events that have actually transpired going back a significant while back. and talking about how this fine company has evolved to what we know and love today in Aduro Clean Technologies. But very interesting here. I know I wanted to get to this here, which is the shareholding pattern, talking about the major shareholders in the company aligned with shareholders to actually vest with certain elements of the company, carbononics. I don't know why I have such a hard time with that. He's such a good content creator. His video this week actually broke down the one third, one third, one third structure. Just absolutely beautiful. Really appreciate those efforts, and part of the reason why I brought him into the fold as a featured channel. That way, hopefully, you can kind of use my reach to get to those other content creators, because I watched the video and I was like, Jesus, I wish I could make content like that. And the guy's got 1,000 subscribers. Again, highly undervalued, just like Aduro. But when you talk about a tight share float of 64 million shares, just insane with this much that's owned by the management, it just makes you wonder about how this 40 million existing shares, almost 41 million existing shares, are going to be split up with all of the institutional buying that could be forecasted or presumed to be on the horizon, which has not happened yet. And Mariusz spoke with this about this during his release, talking about on such a tight share float and an inability of the shares to be readily accessible on the marketplace, it's going to create somewhat of a buying frenzy. That's why I'll just sit back. I'm good. I own my shares. I'm fine. I'm not increasing my position here, but I just will be monitoring the shares. I got to my goal and I'm good. I'm happy. But the end of the report here actually talks about the news that has been released, and I want you to pay particular attention to the dates of release of this. A couple in September, the current month we're in, going back to July, June, May, almost on target every single month this year, coming out with a piece of fantastic news going back to 2022 and so forth, going back to their involvement with Brightlands. So I really want you guys to review this stuff. I'm not going to belinger this report here. I just want you to know that it exists. I can try to get you a link, but the best way to do it is to follow Aduro Clean Tech on Twitter. And that way you can have access to this Arrowhead report. I found it to be very telling. I found it to be very helpful in summarizing all of the wonderful attributes of the company, all in a one-stop shop. So that is it right there, guys. I really appreciate that. We're back now in the live stream. I really want to open it up to some comments, but without further ado, I think it's probably prudent for us to walk through a little bit about how I've evolved to my share count. Okay. I can't do this in an 8-minute video. I can't do it. So what I'm going to do is I'm going to talk about the amount of shares that I have, which is 27,500 shares of the company. It will remain at that level. The dates are going to be provided in the description below, as well as the entry price. I am at alpha on every single block position that I've entered into. 6 total blocks in 2022, 2 total blocks in 2023, and that is just where we are. Okay. Right, wrong, or indifferent, $1,000 in a company like this at such a introductory phase of a company can be life-changing. Now, what's not going to be life-changing is if you take your 5X, you're good with your 5 grand, you're gone. Okay. What I really want to premise in this is to get a little bit of fundamental conditioning in understanding that, yes, I'm going to disclose my shares to you. I'm up significantly in the shares now with, again, some alpha in every block of shares, but I'm just getting started. Okay. And that just getting started November of last year. We are almost going on a complete year of share ownership in Aduro Clean Technologies, which is seen as kind of sputter between the 60 and 80 cent range here. Those who have been involved with the company have been very patient in watching positive catalysts get announced and rolled out to no avail. And are we at a point where there's going to start to be some favor returned? Guys, I don't know. I'm not in that prospecting business. All right. You want to go have your fortune told, go ahead and go pay the money to have your fortune told. I think it's more accurate to tell you that neither I nor anybody know where this company is going. Okay. What I can say is we can earmark and align, or I can provide you the document that is equally has aligned those improvements, catalysts, evolutions of the company, and you can kind of get a picture in your mind about where the potential of where this company could go. Carbonomics talked about this in a de-risking type of profile. With every new evolution of the company, further de-risks the company going forward. I'm going to drop an invite in the comment section, guys, really quick, just for fairness and just for thoroughness. There it is. If anybody's interested in kicking on with me for the last portion of the live stream, this will in fact be the last live stream I do for a couple of weeks. I have a professional obligation. There it is at the bottom. Anybody who wants to pop in, say hello. I'll make you famous, I guess, whatever the hell that means. I don't know. This channel's yours. So I just facilitate the business, and that's the way I kind of make sense of this opportunity for me. I'm not an egomaniac. I could care less how many subscribers I have. What I do care about is the value of the content coming through the channel. Will you post or share this PDF? I will try to do that. I'm trying to give you quick access, Jose. And the quickest way is to log into Twitter. If you have a Twitter account, if you don't, I do apologize. Mariusz has it in his video when he broke the news, which is only a couple of days old. You can have access to the PDF in the description of that video. Okay. I could just take and drop it in here, but it's a 47-page document. So my fear is that the PDF is a little bit larger of a file than I want to try to mess with now. But if you do log into Twitter and just follow Aduro Clean Technologies, they've got it right there in the first couple of tweets on their website. So that's the best I can do for you, Jose. I appreciate the comment and the question anyway. But starting in November, I actually was starting to research Aduro Clean Technologies, and I actually entered into, I see you there, Andrew. I'll get you on here in just a sec, okay? Stand by just a sec. We had 1, 2, 3, 4, 5 total buys out of the 6 in 2022 in Aduro. The first one was a token buy of 100 shares, and that was the first buy. You guys need to understand the still difficulty, albeit breaking loose a little bit, in achieving a share accumulation of Aduro Clean Technologies. I actually had to sit through many hours with my main broker, Merrill, who still doesn't offer it on their platform, which is interesting. There's been some maneuvers about access to these companies. Long story short, I have bought mine through Interactive Brokers. There's a few reports through my private group that talk about the ability now to buy the company through Charles Schwab. You guys are going to want to take notes on this stuff, guys, because you're going to be pissed if you leave the live stream and you're like, okay, maybe 100 shares will work, or a couple hundred, or whatever is in your means, and you can't buy the shares because they are not as easily accessible as I would like them to be. All right, so just kind of keep that in mind. But the November shares were 100, just the token buy. Then the bigger share block at 2,000, the second to biggest share block, 6,900, all the beginning of November. Now, mind you, this was after the game changer announcement, and I was like, hell, I had some difficulty achieving the shares. And so I was kind of frantically buying it around that time. I haven't frantically bought Aduro since November of last year. And then finally 3,500 and 2,500, and one block of buy in December to round out 6 total buys in 2022. 2023 has been 2 blocks. The first block was February 9th, and I paid up for the shares actually. And just as of recent, of course, with this run up, we're in alpha there with 7,500 block. And May 15th was the last kind of top up block at 2,500. All right. So a phase in over the last year, this is where we are and this is where we sit. I'm going to bring a couple of guests on the channel. Actually, I've got my brother here, passive income investor. He's been a guest on the channel over the years, and super, super stoked to have him. But before I bring Kyle on, I actually am going to bring Andrew on, and I'm going to bring Kyle on. You guys, I got you on at the same time. Andrew, what's going on, man? Good to see you. It's your first time on the channel. Welcome. You got to unmute your mic.
William.
There you go. Now I got you. Talk. You're good.
Oh, nope. His mic's still out.
Yeah, his mic's still out. That's all right. You can troubleshoot it. Troubleshoot it. There you go. Yeah. Give me the thumbs up, man, when you come on.
In the meantime, bro, you're sitting on over 20,000 shares of Aduro. Jesus, I need to catch up.
Yeah, I watched your last offering, man. You know, your idea about the 5% rule, it's just prudent. People need to listen to that stuff, you know. The rest of the portfolio is kind of established for me, you know, and this is the area of the portfolio that's the most attractive. I talked about, you know, where we are both globally and domestically here. You speak a lot along the lines of the Canadian perspective. The US is somewhat similar, and I don't feel like we're all roses right now. And I'm looking for opportunity like I always am. And I'm not really sure if the most opportunity exists on the top end of the market. I think these soft spots of the market that have taken some abuse might be due for some action. I could be wrong, but your thoughts, my friend?
No, I think you're right. I think in the realm of small caps, Aduro is a definite outlier. But I think what we're going to see happen here, man, is the opportunity in these stocks that have been beaten up because of the interest rate environment. I mean, I've been preaching this a lot in the Canadian market because, like, I like following the telecom giants. I noticed like financial education there was going off about dividend stocks for the first time in forever. But you look at these heavy like infrastructure companies. And like I follow a few of like the telecom giants here in Canada, like TELUS, and they're paying out like $500 million, $500 million a quarter in interest, yet they're hitting like record revenue numbers and it's just crushing the company. And you're like, they're going to cut rates inevitably. Like everyone's like, oh, they're going to leave them high. But I'm like, their initiative is to bring inflation down. We're not probably going back to 0% inflation, but
no, I hope not.
Rates. But I mean, they're going to bring rates back down. And that's when these companies that have like cut the fat, like the same thing with tech, right? Tech's
well said
right now because they cut the fat and now they're benefiting from having, you know, all this revenue to build margin off of. And all these other companies that are getting cut up are doing it now. And as soon as they cut rates, man, we're back. I think that's when we get back to pretty decent, you know, highs in the market. What do you think about the next quarter or two? That's my curiosity because
I mean, September, you know, it's a 50-50 shake for September. I'll look for a little bit of roll off over the next couple of weeks and then back to business for October, November, December. I actually look for the S&P to finish this year. I hope we make it up 10%. Any bonus above 10% will be a bonus for me. We started off the year so strong. I think passively from markets, I think we'll be a surprisingly up year, right? Coming into this year was so bad, you know, but to forecast into next year, it's anybody's guess. It really is. What I talked about with earmarking some of these overhangs that are still concerning, they're still there. And I just think high real estate, I think the consumer is showing signs of weakness. I think the access of capital will still continue to be there. I think we will have a Fed that doesn't want to cut quicker. I think they're going to remain elevated for longer. And Kyle, I'm in the camp that I hope we do. I really do. I think we've been really accustomed to the last decade where the cost of capital was close to free. And I think that was somewhat organic, and I think somewhat problematic and somewhat reactive now to getting back to more of a normalized pace. Now, do I think 6-7% is going to persist? No, but I think to get to a core two could take upwards of a couple of years. I really do. I think we're in it for a long trough of just treading water for a long time. I really do. Are we going to have some gangbuster 20-25%, 30% stock market? It's my presumption that we do not. And I would be very happy with high single digit returns if not throw in even another couple of negative years over the next 5 or so years.
Yeah, it's like you said, it's hard to predict. I just kind of look at it as like a pendulum swinging, right? I don't think the lower interest rates got us to where we were because they've been low pretty much for the decade, right? I think it was more or less the money printing that the government did at that pendulum swing when they just COVID hit. They printed far too much money, and then obviously inflation got out of control as we saw like the stock market explode and crypto and Pokemon cards, and now it's tightening up. But there's so much capital in the market, even if interest rates stay high. Well, again, I don't think they're going to stay that high for. I don't know. It depends on how high inflation stays, because right now it's a self-inflicted wound, in my opinion. If you look, shelter costs is a driving factor, and shelter costs is a direct impact of higher interest rates, right? Mortgages, landlords raising rents. Obviously, there's some infliction for supply and demand right now that's causing that, because again, interest rates, people don't want to sell. There's not a lot of volume. So I don't know. We'll see what happens, but I think we have real potential that once we get through this, whether it takes another year or two, that the market is still not out of this decade bull run. I think people think we're going into a lost decade, but I think with margin increasing, the innovation that still hasn't like collapsed by any metric, I think is a bit of a bubble, but it's a defining factor to all these businesses that are upgrading their margin capabilities from every different business. So I think this decade these moments are accumulation, like you're doing, like these good accumulation periods in small caps. There's good accumulation in dividends. Like you said, I think the large caps have baked in some value, but I'll pass the question off to some of these guys. What's going on?
I want to introduce Andrew, and I want to introduce Eric with Shade of Light. For those that don't know, they're patrons to the channel. And Andrew, you're now part of the family, man. I'm going to make you a moderator.
Cool.
I want to give Kyle's a friend of mine. I've known him for years. He's a fabulous mind. He's about half my age and twice as good looking. But what would a new investor do now, Kyle, with all that in mind? Andrew's disclosed there that he's a new investor. So what would you suggest as far as some prudent counsel in how to deal with what's being observed now in the markets to set yourself up for the future?
Yeah, I'm at this point in my career, which is probably a little bit more toned to like where I put myself over the last 8 years as a new, because the thing is like everyone's like, oh, diversify, buy ETFs, buy all that. I don't know how old you are, Andrew, but the problem was when I started investing, I owned 2 stocks. And those 2 stocks did very, very well for me. But now that I've kind of scaled my portfolio, it would seem stupid for me to own just 2 companies, right? So it's hard to tell a new person exactly how to invest without understanding like how much income are they making, like the time horizon, all that stuff, right? Because now I'm like, most of my money's index funds, ETFs, dividend ETFs. But again, like Ryan said, I'm proponently 10% of the portfolio, 5%, some speculative stuff. We own crypto, precious metals. Like I'm fairly diverse in that side of it. But I'd love to hear what you're doing as a new investor, man. How do you see this market? Because it is convoluted.
I'm not gonna lie at all. I have no clue what's going on. I know Ryan and I saw his stream up and I was like, hey, I'm gonna go check this out. And then I saw what he was talking about and I was reading up on Aduro, and I studied marine biology, and so and plastic waste is like really prevalent right now. And so I was just getting really into it. And then now I'm like, man, I'm taking notes. I got everything out. And so I don't know a lot about what I'm doing, but I'm hoping to maybe get started here soon. I'm only 22 to answer your question. I'm real young, but I'm hoping to learn and see where I can go.
This is how it starts though, man. Like you find that thing that you're intrigued by. It's literally how I started. Like I found a part of the market, which was the MJ market long before legalization. And that's kind of like you, right? Like you're finding this thing that is kind of falling in line with what you're, educated in or intrigued by. And it's kind of leading you down this investing path of, oh, there's businesses here, and you're listening to Ryan. But that's very interesting, man. So you big into investing, or is this just a new thing you're just stepping into and you're just kind of looking at, you just randomly stumbled on Ryan and you're like, oh, this is
honestly, new investor might be misleading. I haven't started anything yet, but I'm hoping to get started up here soon, or just kind of dip my toe in the water and see how it goes.
I would say education is the key. Eric, you want to can you mute your mic? I hear the crickets in the background, brother.
Geez, I'm on my phone. I'm nowhere near my computer. I don't know if I can.
You're lucky, man. In the country, I hear the crickets in the background. I don't need any background noise.
Well, I don't think I can. Well, I don't think I can on this phone.
Can you not, man?
So.
Well, it's good to see you, brother. I can hardly see you.
Yeah,
Very,
yeah,
very
I'm in the dark. I'm sitting outside by my pool. But hey, listen, get a little bit of advice to a new investor, man. I started way back in like the
yeah,
early '90s when Scott
yes,
Trade just came around.
yes, you
Uh,
did.
like a year out of 59. I'm heading towards 60, so I'm more looking for like the income thing, ETFs like JEPI and Devo and stuff like that that pay income. But I have a core set of stocks that I started investing in long ago, kind of a set it and forget it stuff like Pepsi, Coke, Procter and Gamble, Johnson and Johnson.
Classics, yeah.
And today they're paying me pretty handsomely in dividends, and this is just through accumulating them and reinvesting dividends for many years. I like the products that the Vanguard puts out as far as ETFs is concerned, and Ryan has a portfolio based on the Vanguard stuff. I wholly support that 100%. But if you're going to start off, I would get you a core, so to speak, of solid dividend paying stocks. And if you want to speculate, never, in my opinion, never speculate with more than 10% of anything you're willing to invest. The rest collect them so that they'll pay you. As far as Aduro goes, Ryan told me about Aduro, what, a year ago, Ryan?
Yeah,
I picked
so.
up.
Yeah.
I got almost 1,000 shares of that. I'm not quite up to your power on that, but I used to work in plastics. I worked for Lax Enterprises for a long time. I understand the waste is huge. I understand that that there's a solid need for a company like Aduro, and I always supported it. I plan on picking up more shares, but because of my age, and you'll be there one day, I suggest dividends, man. Go dividends, at least 50% of your portfolio, and just let those build and reinvest and reinvest. By the time you're my age, if you're not a millionaire, I'd be highly surprised.
Now's a
So
good time.
anyone else want to kick in on that?
No, I think now is probably one of the most opportune times in history to pick up dividend stocks. I've been talking about this relentlessly. A lot of, especially on the Canadian side of the border, there's AAA rated companies right now that are paying out yields, like starting yields we haven't seen in 15 or 20 years. And these aren't companies that look like they have any intention to cut them. They could cut them, but when you're getting a 6 to 8% yield off the likes of like something like Enbridge, for example, which people have been touting as going in the toilet forever, and they just purchased and became the leader basically in natural gas. Facilitating natural gas. They're the largest pipeline company in the world. Like, it's kind of nuts. And same with like these telecom giants, right? There's so much, but again, I don't always recommend the individual side. I'm looking at dividend ETFs here in Canada as well, in the US, like ACTHF. VDY in Canada is almost paying 5% now, and it holds Canada's largest companies like Royal Bank. And it's just it's a fascinating time in the market. It always is, let's be real. But I mean, accumulation, this is the opportunity, right? I wish we could go back and kind of pick up some of the tech companies, but I get that exposure through the S&P. But man, dividends, like you're saying, I think there's some real opportunity on those fronts. But on that note, I'm gonna let you guys continue on, because I'm also gonna start a live stream here shortly to talk about just these topics and Aduro probably. But I just wanted to say hi to Ryan, because he said he was kicking out for a couple weeks, and I do appreciate his streams greatly. But I'll let you guys kick it off, because I love this demographic, and this conversation seems
For sure.
very intriguing, man. So keep it up. I love you guys. Peace out.
You the man. Thanks, Kyle. Be well. Yeah, very cool. I'm gonna chime in on that. Actually, I'm gonna keep you muted. You just give me a thumbs up if you want to jump in here, Eric. I'll talk to Andrew. So I think the whole key that I try to focus on is the philosophy of markets, and I kind of try to shy away from the individuals. Now, it's fun to talk about individuals. Eric mentioned some really good ones: Coke, Procter and Gamble, Pepsi, phenomenal blue chip companies. I own them all as well. So perhaps maybe like minds think alike. I don't know. I would consider myself at my age a pretty darn successful fella, and en route to something even greater. Eric's been doing it a long, long time, right? So it's really cool to hear these perspectives of people who have kind of been involved with financial markets for a long, long time. So the philosophy comes from, okay, well, you know how your life is without financial markets. What potentially could they look like with? And then the very simple question is, what are some of the guys talking about with your exposure? What are some of the really low effort types of introductions to the market? Eric mentioned dividend stocks. That's a cool way of doing it. I would almost, if I had to go back and I was talking to my younger self, I would enter into the S&P 500 to start. And that way you can get some time under your belt as an investor And that way, even owning dividend stocks, I mean, had you bought Disney 5 years ago, you'd be kicking yourself now. And 5 years ago, Disney was one of those stocks that everybody just thought was one of the top 5 stocks to own forever. I was one of them, and I own a big swath of Disney shares. But the company has shifted in their philosophy. They've shifted in their psychology. They've shifted in their focus of shareholders in what they perceive to be the right thing, but shares have suffered. The reason why I mention that is if you own the S&P 500, you own the best version of the S&P 500 in 2023. You'll own it in 2024, in 2030, in 2040, and 2050. And that is not to be understated. Furthermore, if you own the S&P, you're grabbing low cost of access to one of the best products. Now, that product comes in multiple forms. Eric mentioned that I prefer Vanguard, but when you start to split hairs around different S&P 500 offerings, I see Matt Money in the group here. Matt's a really good friend of mine as well, right here. Super, super good friend. He's a big proponent of the SPY, and that's another really good offering that gives you exposure to the S&P 500. And I think it makes it easy. If you're invested in our, thrift savings plan or government thrift savings plan through work, right? That's the index fund C fund, but this is the lower cost, kind of a little bit more put you in the driver's seat type of exposure to the S&P 500 that I think all young investors should really look at, and not from the perspective of, okay, Ryan says this is the best investment. Rather, you're going to incur ups and downs. I'm telling you, and my perspective in telling hundreds and thousands of young investors to take a look at the prospects of that is because I know you're going to incur those things. Whereas a new investor, you can't appreciate how you're going to react to those ups and downs, how your risk tolerance is going to play against your holdings. Have you ever lost $1,000 in a day? I lost $2,199 just today. I didn't bat an eye, right? Yesterday was an up $3,000 day. Now, those swings of the market have been evolved over time, but new investors, they lose $6.95 and they can lose their mind, fall on tilt, and they're like, this sucks. I hate Ryan. I'm out. So the idea of breaking down those barriers and access to financial markets is way more important, I think, than the actual asset itself. The asset is the easy part. The asset is the easy part, but the understanding why you're doing what you're doing, understanding how many years you have to invest, understanding and evolving your risk tolerance over time. And that way, maybe you add a different layer, like Eric's talking about with the dividend stocks. Maybe you add a different little speculative arm, but you do that years down the line. But when you've had a chance to set up a dollar cost funding schedule, which is a whole nother discipline that teaches you how to pay yourself first. And that's also very, very important to understand in the investing game. Just one of those tools that you have to just kind of adhere to over time, and you get used to it over time, and you just don't miss that money. That is the rawest breakdown of investing that I can give, and that is the goods. And I find it interesting how so many people kind of stray away from those fundamentals of investing as opposed to revolve around them. Does that make sense, Andrew?
Yeah, absolutely. I mean, you talked a lot about like that risk assessment, and for me right now, when you said like lose $1,000 in a day, that in my brain just right now, because I'm just starting my career and kind of getting my footing here, that feels like really big. But then I also understand what you're saying about the more kind of you're into it, and the more that you're in the game, that kind of risk. I'm trying to read my notes here. The risk tolerance was what you described specifically, and so,
Yeah.
um,
Well, make no mistake about it. I didn't lose the money. It was
yeah,
an adjustment down on $500,000 of wealth,
truly,
right?
yeah,
So those
hmm
fluctuations are going to be, reflective of a down day today.
yeah,
Where yesterday was the biggest day, I think, and it was an up 1% day yesterday. It was a nice day yesterday, and we gave some back today. Options expired today. We're entering into a historically latter 2 weeks of September, which is usually pretty poor, but none of those day-to-day fluctuations affect me in the
hmm
least.
okay,
I have built $500,000 of wealth not because I didn't invest, but because I did. So the whole root of the channel is explaining to people, I don't know, maybe you're better off to do than
Yeah.
not to do. You know, it's that simple. Eric, did you have something?
Yeah, hey Andrew, I got 3 15-year-old grandkids, and Fidelity has youth accounts. So I set up a youth account for each one of them, and they're currently the first 2 stocks each of them I invested in for them was Coke and Pepsi. We're searching for an ETF to add to that. 2 of them are already over $1,000 in both stocks, and they're 15 years old. Just to give you an idea.
Yeah.
And when I'm going to go through a bunch of ETFs, ones that I feel are suited to their youth, their young age, and the time they have to invest. And I'm just going to keep letting that build, and we're going to slowly add more to their portfolios as the years go by. So I'm teaching my younger generation to start investing now. And you know, I bought them their first round of stocks just because I'm the grandpa that I am. But
Yeah.
just to give you an idea, so if you want to start and you want to just lay down something on a set it and forget it style stock like Pepsi, I mean, it's a good company to buy, and you're going to continually get dividends coming in from them. And it's kind of a set it and forget it company, man. I mean, how many times you walk into a gas station, you see people eating Lay's potato chips, Pepsi, you look at the portfolio of things they have and just keep going. And they're currently at what, $1.26 a share for a dividend? I mean, it's a pretty darn good dividend.
Yeah.
So anyway, I'll cut out and you can mute me again, Ryan.
You're the best. Thanks, brother. Appreciate you, man. Yeah, I'll keep you in, but I'll mute you. Yep. So I just want to highlight what Eric's talking about there. He mentioned kind of set it and forget it, but I'll bring him out of the stream actually. Oh, no, he's going to have a smoke. Yeah, have your smoke break, man. I'll put you in the VIP lounge. When we talk about you know, the risk associated with stocks, what did Eric just say? I lost my train of thought. What was he just talking about, Andrew?
He was talking
Just a
about
minute
set
here.
it and forget it, and kind of having that
Yeah,
those stocks set up so that
I
you don't
think
really have to worry about them.
I think if I were going to go back in time, I would never sell. That's what I wanted to like kind of bring home for the group. If there's any like new investors, if I was just going to establish little franchises like I have in my dividend portfolio, Coke, Pepsi, Home Depot, Lowe's. I mean, you're talking about a slew of big materials companies, you know, your best consumer discretionary companies, you know, across the board. You know, I own most of them. And those little franchises, man, this morning I earned 2 dividends. There's just about every single day I get paid a dividend. My stock portfolio that's focused on dividends has about 98 holdings in it. And they're just a few $100s per holding. There's about 37, 38,000 in that small niche. But it's really cool to see even a few dollar dividend pop in there, you know. It's just a camp, or think about it as a small money generator that will render dividends every quarter and roll back into the portfolio. So, you know, you take those 98 holdings, let's say 100 for a round number, and times it by 4, that's 400 dividends a year, every year that goes by. After 10 years, I mean, I've been paid 4,000 payouts.
Yeah.
4,000. Now those payouts are somewhat micro, but that's the power of compounding, and that's the power of money, is to establish those buckets so they work for you while you're not working for that money. It's just that simple. I don't do anything to render that Coke dividend, you know. I just own it, and that has been some of the biggest mistakes I've ever had, was selling stock, as opposed to just looking at really sound fundamental businesses and just owning them for the long term.
So question on that. So you, I assume you say that because you have sold stocks. Do you regret the stocks that you've sold, or do you think that at the time that was the best decision for you moving forward? Or what would you characterize as why you would say that just never sell?
I think you just lose sight of like why you enter into investing in the first place, and that is long term. In other words, if I'm buying Coke today, I presume that by the time my target date rolls around, which for me is around 60 years old, it's going to be worth significantly more at that time. Now, there's a chance that it doesn't. This is investing. This isn't a guarantee, okay? Nothing in life is guaranteed. However, investing, what I have found, and statistics will prove that the longer in the market, the more of a guarantee it becomes, to be honest with you.
Mm.
And if you want to try your luck at other societal temptations out there and try to make your millions doing that, you're welcome to do that. But I think to answer your question, I do regret that stuff, because in the short term, you lose track of why you're doing what you're doing. Maybe it's to render some profits. Now, in some cases, I wouldn't have regretted it because the goal would be, to swing trade that equity. I mean, there was some opportunities a few years ago during the pandemic lows, where companies like Boeing were getting a double whack, and they were trading for $89 a share at 1 microsecond in time. And those would have been opportunities that I would have taken advantage of and then exited the position with the sheer intent of swing trading the name. But for the most part, you end up outsmarting yourself. And if you want to own a great company like Boeing, you just buy it for the long term and own it. You want to own, some single stocks. It requires a little bit more due diligence than just the passive investing, which in my eyes takes more of an understanding of markets and discipline and applying fundamental premises. That's pretty easy. It really is. Owning the S&P is very easy. Owning single stock can be a little bit more difficult, in that you have to understand that your eggs are not in 500 baskets. They are now in one, i.e. Disney. And if Disney decides to go south on you, it's troublesome for you. Eric's done with his cigarette. He wants to come on and say hello. All right, hold on, brother. I got you.
Hey, let me quickly highlight a mistake I made. Well, it's a success and a mistake. I started buying NVIDIA at around $20 a share. I got to over 1,400 shares, and here's where I made my biggest mistake. I sold it when it hit $248 a share. Now, I made some money, granted, but had I held on to it all the way up to 800 and when it split, I'd be on a big boat right now somewhere in the Caribbean going, that's nice.
Yeah, with me.
But yeah, exactly. But so
I'm
I do.
down.
So I considered that speculating back then. I even called the company and had them send me an investor's package, and I was going to start buying NVIDIA right out of my paycheck. So I did. I just kept buying NVIDIA till I got up there, and I'm like, holy cow, they're at 248 a share. I got to sell before they drop. I wish I never would have done that.
Yeah.
I started buying Pepsi when they were about $18 a share back in 92, 93-ish. Some people say, oh, you must have spent a lot of money. No, not really. My cost basis is quite low for that because I had most of my shares before they hit $35 a share. And I just keep getting dividends and dividends from it now. I work because I want to. Let me put it to you this way. I am an electrician. I like to work. I do robotics. I do controls. I do stuff like that. That I kind of get an enjoyment from doing that kind of work. So I still work, but I don't have to anymore. That's kind of where I'm at in life. So carefully set your core stocks, like Pepsi, like Coke, like whatever. So you got dividends coming in, and if you want to speculate, fine, but just don't do it with a ton of money. I got a 10% rule, man. If I'm going to speculate, I don't know, $500,000. I'm gonna use 10% of that to speculate. The rest is just going to keep making me money. So that's how I work.
I think I kept your 10% rule.
Yeah.
In a lot of capacities.
Right,
Yeah,
right.
I didn't break your rule. I'm good. I think I'm good. I know I'm good. We'll talk offline if you want.
Right, right. All right, cut me out though.
You the man.
I'm gonna go. So cut me out. I'll get back into the chat, but I'm gonna get off the video for now. But
sounds good. Sounds good. Take it easy, Eric. Thanks for
you'll
stopping
make
by,
it.
brother.
You'll make it, Andrew. You trust me. You will.
Thanks,
All
Eric.
right.
We'll see ya.
Take it easy, Eric. Yeah, man. So music recommender, he's got a really cool one here to start the Roth IRA. That's in addition to any employer-sponsored program that you could do. Myself and my spouse have the individuals as well, so those are really cool.
Okay.
You could start that. That adds that additional. I think we're up to $6,500 again for 2023 for total contributions. But like what he's saying, you can contribute those post-tax, right? And the tax obligation is complete, right? So you can put those dollars in there to grow tax-free over the course of your life. I would do that as early as you possibly can. And I would consider preserving those dollars as sacred as you can in a way that you never touch them.
Yeah.
until you have to. You're going to find, Andrew, that you, like me, living in the United States is a privilege, and
Hmm.
you can be happy with significantly less than what you're paid.
Hmm.
And not you specifically, but in general, if people can just separate from their money and realize that we do all right for ourselves and we don't have to spend everything like assholes all the time,
Hmm.
that a pledge to yourself would be to take that surplus capital and put it to a program for yourself. Now, ironically, by doing that, you're going to grow more capital than you know what to do with. But hell, you want to be a philanthropist someday, that's a noble cause. I mean, if you want to start a legacy, that's a noble cause. If you, on a simpler basis, want to have the ability to take care of yourself in case of an unexpected family emergency, not only for yourself, but maybe a family member. You know what I mean? Money allows you to take care of some of those scenarios. In a lot of those cases, it really does come down to money. Why do I say that? People, you're sick. It's the root of all evil. No, not really. I've talked to people who have been wiped out by a hip replacement,
Hmm.
financially wiped out. um, many conditions,
Hmm.
a lot of medical conditions that have overcome somebody, and it's a choice of life or death. Well, when those choices of life or death come, even tapping into funds that you don't have,
Hmm.
to continue a quality of life is something that is real, and
Yeah.
you have to acknowledge those things. And money gives you the freedom to free some of that up, but like what music's talking about here, to get those accounts started and grow that money tax free. I mean, you contribute, 150, 175,000 over the course of your life. That account could be worth well over 1.5, $2 million by the time you reach the vesting age of 59 and a half.
Hmm.
And that 1.5, 1.7, 2.5, whatever it is withdraw eligible tax free. So
Mm.
they're very, very powerful when you look at compare the contributed amount to the amount of eligibility for withdraw. So super cool.
Yeah, absolutely. Um, I brought it up in the what's it called, in the chat here a little bit earlier on the YouTube. Um, I know that they have like a bunch of apps and programs now that you can buy stocks on, and even for a brief period, like a couple years ago, I was using Acorns just as like a passive thing that would
Hmm.
invest the spare change thing, and I used that a little bit, and then I just kind of fell off of it and I stopped using it. But I was curious, like, what kind of programs do you like to use, or do you recommend, as an thanks, Eric, as a new investor, do you like, would you recommend?
Yes, it's an awesome question. And I think sometimes people kind of overshoot this category.
Hmm.
And by overshooting it, sometimes they undershoot it, um, by opting for Robinhood as their primary account. We've gone full circle with the discount brokers. The discount brokers being the most notable one, Robinhood, less known, Mumu, Webull, which I do have, M1 Finance, which I absolutely have, and is probably the least of the aforementioned, M1 Finance. So the links on the new ones should link over. You should be able to see my portfolios in the description. So those links do work. I made sure that the new links on the new on this video in the description, if you go down and look at like Vanguard dividend portfolio, you should be able to click over and actually see what's there. um that's a really cool feature to actually kind of share portfolios. I don't care. But those discount brokers, M1 Finances is very unique in that it's kind of an invest and forget it. It's very conducive to passive investing, which can be a very good thing for new investors because it removes the temptation of and access to trading in and out of your money. In other words, it's not as conducive to trading in and out of, but it's really good to invest and forget it and build those accounts up over time. And those ones that are examples there started in 2019 and 2020 respectively, and the one is staring down 30 and the other one's staring down 40 to 43,000. So in just a couple of years, just by funding those up over time smartly, those dollars go in there and they grow. That's what they do. But to circle back to your answer, I give that little elevator pitch for caution on the discount brokers as a primary broker. I think if I were in your shoes as a 22-year-old, I would look at some of the more established brokers. I would look no further than number 1 and 2, Fidelity and TD Ameritrade. I really like Charles Schwab. It's ironic I do not have a TD or a Fidelity account because I am so rooted in with Merrill, which is Bank of America, which
Okay.
I am satisfied with them more so from the perspective that it is big and established. And if I want to find an ATM in Austria, I can find it.
Yeah.
It's big, it's huge, it's an established, whereas I don't want the bulk of my money with Robinhood. I don't have that level of trust. And trust for me is huge. For a lot of people, the aesthetics are huge. In other words, they may come and they may say, Ryan, you're off. Weeble's the greatest thing ever. Moo is the greatest thing ever. They love the aesthetics. Don't love your broker so much that you fall head over heels with it and miss the element of what I'm discussing with regard to reputation. Reputation for me means a lot. It will be up to you to kind of find that. But at the end of the day, your broker is your conduit to the market. In other words, I own Vanguard products in my Merrill account. I own Vanguard products in my M1 Finance account, right? So the broker that I have is just the umbrella, and I can place assets under that umbrella in the capacity that I want. So don't misconstrue it if you own Fidelity that you have to own Fidelity products. It doesn't work that way. It really is just your conduit to the market. And I would look at TD, Fidelity, Charles Schwab, Merrill, Vanguard. I've heard people they're very happy with Chase, self-directed program, Ally, self-directed program. Haven't ironically heard a lot about SoFi, but SoFi is a big craze amongst new investors. I haven't heard anything on SoFi. I own a lot of shares in SoFi just because I think their attempt at radicalizing the banking industry, which has been kind of a dud for a while. I think they're making really good strides in that. They were the student loan company for a while. Andrew, you're familiar with SoFi, but
Yeah.
yeah, hopefully that answers your question. Do a little research. Don't get too crazy on that. If I were you, I wouldn't stray too far away from my top 5 recommendations, and really with an emphasis on the first couple. You'll be very happy you did.
Yeah, sounds good. I'll definitely be sure to check those out and do some research on them. I did pull up the description on the video, and for whatever reason, I'm getting an error message when I click on Vanguard.
Are you?
So maybe that's just my system. But I can check. I will check those out though.
Yeah, no, for sure. And I will check it on my end. I want to see, maybe I can jump in and actually look at it myself here. Aduro,
I will check
share,
it on my
stand
end.
by,
See,
jump
maybe I
down,
can jump in and
boom,
actually look at it myself here.
and it should be
Aduro,
down around
check
here.
it
So
on
the
my
dividend
stand by,
portfolio, you
jump
see this
down,
on your
jump in
end,
and actually
boom,
look
I
at it
click it,
myself here.
it should be down around here. So the dividend portfolio, you see this on your end, just put these in here last week. So something's not
should be down
around here,
here.
so I did apologize for that. But
No worries. I just was curious. Wanted to let you know.
yeah, for sure. No, and if worst comes to worst, I can actually share those via direct link to you. It's not a big deal. Like if I emailed it to you, which I'll do,
That'd be great.
you can just fire. Here's my, I'm gonna fire over something to you here. There it is. That's my one of many emails. And I'll respond with the other emails. I manage about 6 accounts, but that'll get to me. And I'll just attach that link so you can take a look. You'll enjoy it. It's fun, man. Go through and see how I own the sectors of the S&P 500. That's kind of cool. There's 11 of them. I own all 11 in ETFs. So that's kind of cool. And then the dividend portfolio is fun to just kind of scour through. You'll see some of the names that Eric talked about, but you'll have fun doing it. It's fun. I geek out on it a little bit, what the hell?
Absolutely, yeah.
Cool, man.
But yeah, just kind of trying to absorb all the information and then just reading up on all this stuff. So theoretically, let's say I was gonna go. I read more about Aduro and I really liked that, and Just for the sake of the example, I checked out like either on Vanguard or Merrill, that I wanted to buy stocks from that. Do I just go in and say I want to go buy stocks with Aduro, and then how does that process work? I've never bought stocks. The only like real knowledge I have about it is that my uncle bought
Yeah.
stocks way back in the day, and he's like, when I die, you should hear the words ka-ching, and that's
Yeah.
all I
Yeah.
really know. And
Yeah.
so I haven't really looked much into it or really been
I've heard
as
it. I've heard a ton of stories like that actually for generational wealth being created. You talked about Eric talked about it tonight too on the stream.
yep.
It's very powerful. I'll give my kids my legacy that I don't do that for this. I do it for the win of the order. But um, when it comes to Aduro, you're going to find some difficulty on the major brokers. Now, my understanding, and don't quote me on this, is that they are accessible both on TD as well as Fidelity. I will tell you that they are not available on Merrill at
Mm,
present. If you wanted to call broker services and bark up their tree and be like, hey, what the hell? But the last conversation that I had with them barking up their tree is that they explained to me that they were going to wait until the shares got to $5 and then offer it. A lot of brokers are pinching availability to OTC stocks, which are pink sheets. They're penny stocks,
mm-hmm.
right? For all intents and purposes. So they get a black eye because everybody has seen the Wolf of Wall Street and just expect that everybody is, trying to get over Aduro and many other companies that I scour along on the top 1%, and some of the schools of thought on some of the circles that I follow through social media actually do the same. There's some really good companies out there, phenomenal. And there are books written on this, very idea that getting in on the ground floor it can be a very powerful idea. Now, I just have to caution a new investor, that what I'm doing is just about as risky per se as anything else. In other words, it's not like buying Johnson and Johnson, and that speaks to the share availability and the company just coming public less than 3 years ago. Really, the notoriety of the company has just been made known about their splash and what they're doing with shale oil. um, but you will find it difficult to do that unassisted. You may have to call and do an assisted trade, and that's all doable. And
Mm-hmm.
that's one thing about working with the aesthetics of your broker. When you start a Fidelity account or TD or Merrill, see, I don't want to switch away from Merrill because I know every nook and cranny of the broker, right? So
Mm-hmm.
you ask me questions. I would say that the answer is just education and familiarization with the platform of your choice. It's going to be
Absolutely.
it's going to be part of you, right? You're going to be able to pull it up mobily, and monitor that. You're going to be able to work with the interface on the desktop, you know. Um, but that that is really the nuts and bolts of acquiring stock. Buying Apple computer is easy. You could buy 5 shares of Apple. That's simple. Microsoft, because the shares are so readily available. But when you're looking at those tight floats, that you know, I mean, I'm really scratching the surface on an Aduro Clean Technologies, where it is relatively an unknown, even with the blowout announcements that they've made. It's not institutionally known. It's not being institutionally bought. It will. And when it does, it's gonna change and re-rate the stock for sure. Because if you look at the daily volume, it's absolutely anemic.
Mm-hmm.
So, but I you know I think you would have some success with the top tier brokers, TD, Fidelity, Charles Schwab. I know you can get them. And Charles Schwab is a broker that I recommend. They're quite good. I've been very happy with their desktop and mobile application. Very, very reputable, quite good. I just so happen to own my shares in Interactive Broker, and that is not a broker that I would recommend to a new investor. It's very, very complex, very intuitive, and why, you know.
Mm-hmm.
Um, it's just not necessary at this point. But it just so happens to be one of the few that actually I had the easiest time accumulating some shares in Aduro, and it was easy to do so.
Mhm.
And I haven't bought shares as of late because I've heard some scuttlebutt that some of the brokers are kind of pinching down on some of that activity. Even
Mhm.
on Merrill, it used to be easier to accumulate. They're just not accommodating that anymore. You know, you pop big and they're on the hook for a sizable profit to the investor. And the flip side of that is a lot of investors get involved and lose everything they have. So now they're dealing with, you know, large payout obligation, or they're dealing with a bunch of pissed off customers. You know, why do it? Why not just curtail and curb that activity? And Merrill has really done an aggressive job of that.
Mhm.
And it's okay because I don't carry the bulk of my business with them in that capacity, so I have to seek it elsewhere.
Yeah.
Yeah.
I had a question and it totally just escaped my brain. Give me just a sec to think about it real quick.
No, you're good, man. Very cool. I will be probably 6 more minutes, I think, Andrew, and then I'll shut her down and take the time off, man. I
Yeah,
probably yeah, get on with my evening and find a nice Netflix to put on or something. Yeah,
absolutely. Before I saw your notification, I was playing
that's
Rocket League and
cool.
I was like, oh, you know what? Let me go see what Ryan's up to.
I'm glad you did, man. Very
Yeah, me
cool.
too. Um, Shoot, I can't figure out my question to save my life. Oh, I figured it out.
Nice.
So I did what you said, and I looked at Twitter, and I followed you, and then I followed Aduro Clean
Yep.
Technology.
Yep.
So I'm gonna read that report later tonight before I go to bed. But I was
Do it.
curious,
It's really good.
how do you find like those penny stocks? Like I know that that might be a silly question, but
No,
like
no,
did
no. It's
you read up on it and think like, oh, that seems like a really worthwhile one? Or did you like, I know it probably took a lot of research, not to downplay that at all, or just like I don't think you're the kind of guy to just go out on a whim and be like, yeah, that one looks okay. But how do you, how do
no.
you like find them? Like, is there just
Um,
like a list that comes out annually of like, hey, here's all the penny stocks, and then do you just like follow them or read up on it, or where do you
um,
go to look for stuff like that?
Yep. So for the most part, the OTC markets are broken down into three parts. There's OTC Venture, OTC Quality Board. All right. I have covered companies on OTC Quality Board, which is more of your higher upper echelon, more audit scrutiny. We'll go over those. And I've actually successfully covered companies that have entered into the NASDAQ, which is really exciting.
Hmm.
Kind of solidifies and it kind of proves that it is the proving ground. There's no doubt about it. Most of those companies will end up failing
Hmm.
because the allure and temptation to bring technology to bear, that is the very check and balance is through the OTC markets. Unless you're such a good idea like ARM or Birkenstock came public. My
Hmm.
favorite shoe company, valuation of 7 billion. They're going to be IPOing here shortly, but you know it is a consensus amongst a group of thinking heads that bring these opportunities to me. I'd be a lying asshole if I came onto social media and I said it was all me. That's not the truth.
Hmm.
And I don't think you were in here at the top. I actually thanked the gentleman who actually made the referral to me, and that
Yes, I was there for that. I saw that.
great, great. And that's important because those thinking heads on social media share what they spend their time in a niche. It is not my niche. It is fascinating to me. The timing is great. I love to carve out a piece of the portfolio to speculative investing, and that's what this is, speculation. Um, I like my quality to be a lot more than just throwing a dart at a dartboard. So,
Hmm.
yes, to your point, I take it very seriously. I get solicited with people sending me companies all the time, just because of my forward facing social media presence, right? And it's like, companies are brought to my attention in a lot of different capacities. Right now, I'm covering five. The two most interesting plays that I'm covering right now, Aduro being one of them, the second being Highly on Holdings. Those are the two major conviction companies that I have right now. And both of them are in kind of the climate change, low carbon impact, plastic recycling, right? Those initiatives. Highly on was also brought to me. through social media. And I think that just speaks to the importance of the network and understanding that there are conduits like myself who, if the opportunity serves itself, it's a great opportunity to kind of blow it out to a larger audience and introduce those opportunities. Now, it doesn't mean that people have to fall all over themselves,
Hmm.
but it certainly does clean up the necessity to walk into the analogy that I used, walking into a desert of, a potential find of 10,000 stocks, and you've got to dig for each one of them.
Hmm.
It's certainly not like that for me. I don't come over watch list. I used to. It's a waste of time. I'll come across a stock that may have wonderful fundamentals. You'll buy into it. It'll drop 50% in a week.
Yeah.
So don't think for a second this game is about finding that perfect stock, looking at it, evaluating it, making a fundamental assessment, and having that stock just creep to the upside. It's just not like that. You'll invest in a piece of garbage company and make money from it.
Hmm.
Conversely, you can buy the greatest conviction company out there and lose money doing it.
Hmm.
And that needs to be coined in a box to understand that speculation is just that. And we're looking to carve out those pieces that in both of the opportunities that I have that I'm big conviction on in my speculative categories, I think kind of are about as far away from speculation as they can possibly be,
Hmm.
because they are leveraged with big industry. Hyliion is leveraged with Peterbilt. They're leveraged with Cummins. And so I think it's important to understand that these small companies, as much promise as they might have, it certainly helps to look at their connections within big industry. And I've highlighted a few of those with Aduro tonight, if that makes any sense.
Yeah.
It's a tough question, but it's a good one.
Hmm. Absolutely. Um, I'm sure that you and I could talk about this
Oh,
for
yeah.
on and on, but I don't want to keep you
No,
past your time. I'm gonna do some reading and get into the research and check that all out. And I'm sure I know. Thanks for the email. I know how to reach you.
yeah, man.
And
Yeah,
it's been a pleasure talking with you. And I got to keep joining these because I'm
yeah,
learning
man.
so much.
No, it's a lot of fun, man. You notice how the network chimes in to help people.
Yeah.
That's pretty commonplace, and we've been doing this for about 5 years plus on the channel. It's a lot of fun, man. It's a great environment. We speak about the money topic as it's a little more commonplace than people would maybe suggest. It's a little more faux pas. I blow down those barriers for people. It's a lot of fun for me. Yeah.
Yeah.
So
Absolutely.
good,
Well.
good stuff. Good stuff,
Yeah.
Andrew, man. Well, thanks for coming on, brother. I hope you
Of
learned a
course.
bunch, and
I sure did.
have a great evening. Have a great rest of the day and night and weekend. And I'll catch you later.
Yeah, you too. Enjoy your Netflix and enjoy your break, man. You
Will do.
deserve it.
Will do. Thanks, Andrew. Be well.
You.
Very cool stuff, man. I enjoy the heck out of that, man. Very cool to kind of bring it home, kind of outreach. I used to do that on the live stream more often than I've been in a little bit of a habit of really just running the live stream myself, just because I'm such an entertaining fella. Um, but I do like that outreach. Andrew's 22. I'm in my mid 40s. It's really cool to get those perspectives. Eric came on. I thank him for his time. And finally, Kyle with passive income came on. Again, if you want to reach out and find those links, it's really cool to hear that the message of referral comes through the channel as good as it does. There's a lot of people out there like Andrew that are hungry for information, and we try to streamline that information. Again, it doesn't mean you have to act on that information, but information is key. Information can be very, very powerful, and information, if it's the right information, can be very, very lucrative. And I wanted to take this opportunity this evening, at least for the first half of the live stream, and highlight what I thought was just an absolutely phenomenal month for Aduro Clean Technologies, and many, many more to come. I would again encourage you guys to read over some of the literature that we've passed through, subscribe to some of the social media content creators that we've highlighted this evening, as well as kick over to Twitter and follow the story. It makes us that much more powerful as a group if we can speak intelligently about some of those companies out there that are bringing initiative to the table. Guys, I appreciate you. I won't be on next Friday. We're going to skip the live stream next Friday. I will be involved in a work related obligation. I do apologize for that, but nonetheless, we will be back hopefully in a couple weeks, hopefully. It's a 2-week obligation, and I'm hoping that second week we're back. But nonetheless, hopefully we can get some material changes to the north here in the stock market over the next couple of weeks, get through September and move on to the holiday season, the year's end, as I do expect it to be a little bullish coming into the year's end 2023, and watching some of these great companies that we're covering start to materialize. And Aduro was the theme this evening. Really appreciate you guys tuning in and catching that message this evening, guys. Thank you so much for tuning in to the entire live stream. I appreciate you. It's the fastest 60 minutes on YouTube. We'll catch you in the next one, guys. Be well. Have a great weekend. We'll catch you in a couple of weeks.